morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, July 11th. Well, we did get a sell-off yesterday. Market divergence, as we mentioned in yesterday's video, started to take shape and play out. We ended up having a gap up and a clear reversal. And the gap up days like this is very important to monitor. And I always stress the first 15 minutes. And you see, we had a couple of traders that I spoke to over the phone. One actually watched the volume play out on the opening, took that short sale, and made some nice money yesterday. So it can be done, but we need to see what's going on under the hood, so to speak, and that's why I point out these market divergences and a lot of these indicators that really give you a good idea where the market is headed, aside from all of the noise intraday. So we did get our sell-off, and I'm looking at the 10-minute chart in front of us, and partly due for earnings. Cummins came out in the middle of the day. He said they actually stated that they guided lower. Their earnings will be negative, and that really put an additional damper in the markets. And you can see over here, right in this area here, where the markets. This was right about the time when they pointed out they're guiding lower. Market sold off here, and along with Applied Materials, Advanced Micro Devices, all having negative guidance, and that's not healthy. It's not what you want to see if you're a bull in this market, especially at these lofty levels in general, in the S&P. So not good for our second quarter releases so far. And we're going to have to wait and see. We're going to have some good big numbers for J.P. Morgan and Wells Fargo this week. That's going to be another key. Also, FOMC minutes today. That's going to be a big driver here, I think, with the markets, so what Bernanke has said in those meetings. And if they're pointing to a QE3, I think you're going to have crude, gold, and possibly some of the metals actually move higher on that if he's pointing to a QE3. And if not, again, the market would probably sell off for that, and the dollar would rise and create additional strength in the dollar, which would create weakness in the market. So something that we're going to monitor very closely today. Being cautious with the minutes, please be aware. I believe it's 2 o'clock, 2:15. It'll be in the morning call when I send out. So where do we go? Where do we go from here? It's going to be tough. Right now, if you're intraday trading, obviously it's not going to be much of a concern. But if you're trying to position yourself, what would you do? Would you be buying a dip here, or would you be shorting? Well, my guess is that, my opinion is that I would not want to be chasing shorts down here, and I don't know if I want to be buying a dip here. So not that there's much help in that. So my basic thesis would be to stay on the sidelines and see where we go to position yourself short, because McClellan, which I'll show you, closed around 8 today. It's not overbought, not oversold, basically in neutral territory. Bar chart momentum indicator is showing a little bit of being oversold. We did have a big down candle yesterday, so we could either get an additional move lower, or we could retrace that candle at least 50%. And that's what we need to really watch. Patience is going to be key here in the next day or so. We are in a seasonal tendency right now of weakness in the next couple of weeks, between this week and next week. Getting towards the end of July, we usually start picking up momentum to the upside and then reevaluate, obviously, in September, October. And we usually get that rally into the fall. And again, that's a little bit out there, but just wanted to point that out. All right, so let's move on to the charts. I opened this chart up here. I brought it in, and I wanted to show you. This is a 10-minute chart. This is where we were in nine trading days, and you can see gap down, gap up, grinded higher, low volume, gap down, sideways move, gap up to go back down again. So clearly chop, a lot of chop, but it's tradable. The markets are tradable, and if you take it as your stops or your best friend, you will be in the markets for a long time. So please be aware of that. Okay. Anyway, moving ahead. So you can see where we are here in these charts now. A lot of nothing. We, sideways consolidation. We had to move lower. So this is something I just wanted to point out. But look at this sell-off here yesterday. So really, 4.5 to 1, panic selling, no question about it. All right, let's take a look at some of these indicators, and a couple things I wanted to point out. The bar chart momentum index, 98. Okay, 98.5 usually begins getting be oversold. So right in this area here, we'll see what happens today, tomorrow. But clearly a big down candle, and something that we really got to really need to pay attention to. So that's why I said today was kind of iffy. Where can we go? We can really go anywhere. Whereas like if we were up here, I'd say guys watch for the pullback, which I mentioned a couple of weeks back, and sure enough we got that pullback. So take a look at the NYMO. And you can see the NYMO, the same thing. We're at right around 831, really neutral. I'd like to see this actually roll down again. And then look to position ourselves to look to buy the dip and buy quality companies. I'm looking at right now the beaten down coal sector as well as energy. So some of the energy names are looking really ripe for the upside. But again, way too early right now. We did have a couple good trades in energy a few weeks back, which we bought that bottom, and market really rallied hard. But right now, what we're starting to roll over again, I think there's a little bit more downside. All right, now let's take a look at some of our key barometers that I look at. Now here's copper, and I always mention copper here in the videos. This is key, and we really basically took back this big candle here, and look at the copper and SPX indicator, our ratio chart, just moving lower and lower and lower. So this is not what we want to see. This is really a good gauge, a barometer of the economy, and this is not good. So we want to start seeing sort of building a base here, maybe down up in this area, make a little higher low, and start building the base to move up. Then I'd say, hey, you know what? We're going to look to start buying the dip. And this is the other key factor here, and this I keep mentioning is the Shanghai. Look at the Shanghai. Not good at all. Our ratio chart here rolled right back down again. Now we are oversold over here, but when we get into this critical juncture, this 2150 area is going to be a major support area. So this is going to be interesting to see in the next couple of nights to see what happens. But China last night, they had some additional numbers come out. Very, very cautious. Very cautious. And I think that there's going to be a big play in the China slowdown in their economy here in the States. And we're going to play that, and I'll keep you posted on that. The reason why right now it wouldn't be panning out, it's a little early, because all eyes are focused on Europe again. So once Europe subsides, and then they're going to be a lot of the traders and fund managers are going to be looking at China saying, we have a slowing economy. They're not going to be buying, stockpiling our commodities, and they're looking to get whacked. Speaking of commodities, just briefly, I do not have a chart. We have some traders that like to trade commodities. I'd be looking at the grain sector for a possible short. Corn, out of control, weekly double top in corn. That's going to hold perfectly with the CRB index and your grains index, the JJG. So you might want to take a look at that for a possible short candidate, because they literally, because of the drought here in the States, they just went parabolic the last 2 weeks, so they're due for some sort of a pullback. Something just to keep an eye on. All right, let's take a look at our trusty U.S. dollar. And as you can see, we had that bull flag I mentioned. We came back down again, and now we're breaking out here, guys. This is really critical. This is a little scary. This dollar starts to break out, we could really have a nasty little sell-off in the next couple of days and weeks, actually. And I'm going to go right into the chart. I'm going to point out to you what I'm seeing. And this is one here, the SPX. Now, this area here we have on the SPX, the cash index, is a bearish rising wedge. Okay, this is a bearish pattern, not until it breaks, though. If it doesn't break, we can continue to chop up in here. But a break below this 20 and 50, you're going to get down to that 1300. I mentioned to you a few days back, 1300 is going to be a critical juncture here, and that's going to be the 200-day moving average. If we break that, okay, which yet to see that even being possible at this time, but if we do break that, you're looking at 1260. 1260 would be your next major pivotal area of support. It's 1300, 1260, so keep an eye. And if it does break that, more than likely it'll be a magnet back down to that 200-day, just like what happened here. This area here is happening again. But what's happening, if you looked at it, we're making a lower high. So the index is not as strong as it was back here. So this is important. We need to really hold this area here, this 1320 right now. Otherwise, 1300 will be the next area. Okay? All right, now we'll get into our index charts, and then we'll call it a day. Very similar spiders here. This is more of a channel than a rising wedge, but you could view it as you wish. Again, major distribution. If you see what's happening here, we have volume. Volume. We did have a little bit of a spike up in volume here in the last couple of sessions in between here, and that's nice to be seen. But if you look at this volume chart and look at the bars, distribution selling is much more greater than we are when we go up. So this is not good. This is not healthy at all. And that's not what we want to see. Now, we're stochastic is starting to roll here, so this is good. If we can get back and stay within this wedge, the 133, 135, then it'd be interesting to see if we can get back up here and start to roll. Now, don't forget, usually when we have these large engulfing candles, whether it be up or to the downside, in this case down, we like to see this thing start to break, at least retrace back 50% of this move, fail, and that's going to be a proper entry to get short the market, okay? So let's keep an eye on that for today and tomorrow. Now, here's our inverted head and shoulders. This is just about now starting to fail again, so let's see if this holds true. We did get close, though. 137.83 and 138.78. I mean, that's pretty close for government's work, so, I mean, I'll take that as well. But inverted head and shoulders here, we moved up higher, and now we're starting to break back down again. So a lot of failures in the market, so it's something that I really need to keep an eye on. Russell, very concerning chart here. A lot of distribution. Big engulfing candle. Now, we are still above the 20 and 50 in the IWMs, which is the ETF for the Russell 2000. But this is not healthy, and it's not what you want to see when you have a healthy market. And right now, I wouldn't call this market being healthy. The market's totally being propped up by the Fed. Otherwise, this market, S&P, should be somewhere around 1,000. So this is something really to consider here and watch closely what happens with the Russell. Another one, the transportation sector, which is the leader of the indices, and we are just about breaking now. We held the 200. I'm sorry, the 50. We are below the 20. We held the 50, and now if this thing breaks, all eyes are going to be on the 200-day. And God, if this thing breaks down below the 200-day, all bets are off. But again, it's holding up okay. I mean, even though we had a bad day yesterday, for the bulls, it's still holding up. We did do some damage on the charts, but it's still holding up okay. Lastly, we have the Qs here, and not good at all. If you could see here, Apple actually got pummeled yesterday, down 7, and as you can see here, we're just hanging in these moving average support area here. Look at this big distribution bar. So really important to keep an eye on. It's going to be critical the next couple of days, and I think what the FOMC statement is going to be like the minutes today will be a tell sign what's going to happen in the next few days going into the end of the week and going into tomorrow. So that's really what I'm looking for, and then we'll get an idea which way we're going to go. But again, trade the best setups today between 9:30 11:30. Best time to trade, and then I'd be waiting for the Fed. And then even then, if it gets too whippy, just step aside and then wait for the markets to calm down a little bit tomorrow into Friday. All right, everybody have a great day. Be safe, and I'll talk to you tomorrow. Take care.